This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody across Bloomberg platforms. Yes, indeed. Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. S&P 500, kind of a bummer, down for a fourth consecutive day here.
If you're long this market.
That is true.
If you're short over the last 4 days,
I like that you think
smiling
about those who might be shorting the
market. You know,
two
sides to every trade, Carol.
Very true.
S&P 500 down about 1% right now. The Nasdaq Composite down 1.5%. Mega cap tech really taking a hit today. We're going to have much more from Charlie Pellet in just a minute.
Yeah, I'm looking at the S&P 500, though. You know, you dig inside the index, kind of an even split, 252 names to the upside, 249 to the downside. So we're going to talk about the trade, as you said, in just a sec. Also ahead this hour, you know, IPO market, not so shabby. The biggest IPO of the year getting out of the gate, rallying on its first day of trading. We're going to get a look back at the year that was and a look ahead
one of your gainers
to 2026. It is.
It is. Okay, good. Just making sure.
It was a lead ad.
Okay. Plus a strategy session on the next Fed chair and policy and how it could affect the investing landscape.
Matt Luzzetti's in the house, and so is Alli McCartney. So we'll talk about the Fed, fixed income side of things, expectations for monetary policy, and then we'll talk broadly about financial markets. Hey, we're also going to get into what the New York Times has called, they've called her actually the connector of New York's powerful. They've also talked about her as like another, I think, report, the billionaire whisperer in New York City. We're talking about Wylde. She's the outgoing president and CEO of the Partnership for New York City, but she's part of the transition team for the New York City mayor-elect. So curious to see what she is hearing. We know the New York City economy is so important, not just for the financial community, but really for the overall country.
Yeah, we're going to talk to her in just a few minutes. First up, though, as promised, to check on the day's trade and top business stories, here he is, Charlie.
All right, I thank you very much, Tim. Stocks lower across the board, but Carol was alluding to Medline. Do want to bring you up to date right there because Medline shares, they're up right now by 31%. We are tracking it on Bloomberg Television and Radio. Biggest IPO of the year. If you don't use their products, you certainly know their products. The company manufactures and distributes medical supplies such as gloves, gowns, and exam tables used by hospitals and doctors. Out the gate at 29. Right now, Medline 38.01, looking at a gain right now of roughly 31%. This on a day when stocks are selling off. The Dow, the S&P, NASDAQ all lower. 4 declining days in a row on the S&P right now at 67.32. We're down 67 on that index, a drop of 1%. Dow Industrials down 194, a decline of 0.4%. The NASDAQ Composite Index down 340, a drop there of 1.5%. 10-year 4.15% with a 2-year 3.49%. Gold up $31 the ounce, 43.33, up by 0.7%. West Texas Intermediate crude oil up 1.4%, 56.04 the barrel, and Bitcoin down 2.4%, 85,600 right now on Bitcoin. Recapping, Medline surging now at 37.99. We'll be hearing from Micron Technology after the close of trading. Ahead of earnings, Micron down now by 3.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks. Well, Fed Governor Chris Waller backed further interest rate cuts to get the central bank's setting back to neutral, saying policymakers need not rush to do so. He made those comments earlier at a CNBC event.
I believe inflation is under control. Inflation expectations are anchored. Standard central bank wisdom is you look through one-off price effects like a tariff would be if it has inflation effects. Then the labor market's telling me we should continue cutting the rates. And that's kind of my view about things.
All right, that again was Fed Governor Chris Waller at an event earlier today. He is under consideration to be the next Fed chair, expected to meet for an interview with President Trump later on today. Asked about that, he quipped, "That's kind of what he had heard.
What else
They're a little
say?
cagey. Exactly.
What else are you going to say? Meantime, at an event, Treasury Secretary Scott Bessent again rejected reported concerns about the qualifications of National Economic Council Director Kevin Hassett as a candidate to become the next chair of the Federal Reserve.
All right, so let's talk about the next era of the U.S. Central Bank and more. Here with us once again in studio, Matt Luzzetti. He's Chief U.S. Economist, Head of U.S. Economic Research over at Deutsche Bank. Good to have you back with us.
Good to be back.
It does feel like we're trying to figure out who's next. You do actually write specifically about a Warsh nomination and what it would mean for the Fed. Does it really matter who ultimately will be as Fed chair, since it is one vote, an important vote? But
yeah, so, we've had to, as this news evolves, write just about everybody that's a front runner. So we wrote a Hassett piece before. Months ago, I think we were talking about Governor Waller and why we thought he could have been a very good candidate for Fed chair. But to the question of does it matter? I mean, the market is pricing it like it does matter. There's a premium in the June FOMC meeting. We're building in more rate cuts at that meeting than the surrounding meeting. So the market is pricing something happening as that transition takes place. I think we're a little bit more skeptical of how much it can matter. Clearly, I think Chair Powell has mattered recently. I think you don't get the December rate cut without Chair Powell essentially pushing it through what is a very hawkish committee at this point in time. But I think he built up that confidence, the credibility within the committee over a period of time. Just somebody coming in from the outside with a more dovish view is not going to be able to get this hawkish-leaning committee to cut rates aggressively up front.
Of the candidates who are the reported front runners, is there one who it would send a signal to you, or maybe send a signal to the markets, that the Fed's independence is at stake?
Yeah, I think that there's lots of questions around this. I think when you kind of see surveys, Kevin Hassett raises some of the most concerns around Fed independence and kind of commitment to get inflation back down to target. And I think that's somewhat quite natural. I mean, he's been in the president's orbit for a period of time here. He's been an economic advisor for the president. He's been calling for aggressive rate cuts at this point in time. All these candidates are doing so at this point, as we heard from Governor Waller recently. And so I think whoever it is, the next Fed chair is going to have to earn the market's trust that they are going to commit it to bring inflation back down to target. And I expect the market to challenge that a little bit.
Hey, Matt, the New York Times writes, next Fed chair in a no-win scenario, a selection process draws to a close. And they go on to say the person picked to replace Jerome Powell will be thrust into a credibility problem that will be difficult to escape. Is that the case? And I also wonder, sometimes you get into a position and you realize the weight of a position. And we know what the Fed does means a lot, not just to the U.S. markets, but to global markets.
Yeah, so I think it is the case that there's going to be a challenge for this next Fed chair coming in. They come in almost with a mandate to cut rates meaningfully. The president has called for the Fed funds rate to be down close to 1%, near the lowest in the world. Mm-hmm. And yet, even though Governor Waller said that inflation is under control, core PCE inflation is at 2.8%. It's still 80 basis points above their target. We're now 4.5 years in well above target inflation. And although the market's pretty sanguine about the inflation outlook, we do have a stronger growth outlook next year. We have fiscal stimulus that's coming through the pipeline.
Sounds
the Fed
pretty
has
good
cut
to
rates.
me.
It actually looks like a pretty good outlook from a growth perspective. And then a question of does that feed through into higher inflation pressures?
What about the labor market, in your view? We got some data yesterday. It was weird to say Jobs Tuesday over and over again.
It was.
It's partial data, and we'll get some inflation data tomorrow. But the jobs market, how does it look into you?
So the way we've been describing it, and I think yesterday was another case of this, it's a Rorschach test for how you think about the labor market. Each of these reports has good elements and bad elements. I think yesterday's report had strong job gains. It had a broadening out of job growth. We've seen the private sector rebound. We had negative job gains in June. Past 3 months have been 75,000 plus in terms of private sector job growth. So that's all quite solid. The weakness was in the household survey. You saw the unemployment rate rise to 4.6%. Broader measures of labor market slack actually picked up more. I think importantly at the December meeting, Chair Powell highlighted why we should discount that data. Mm-hmm. It's coming right around the government shutdown. We thought that there was going to be distortions to that household survey. So Fed pricing hasn't really moved all that much on the data. I think far more important will be the December jobs report that we get in early January.
So the worst case scenario is we've got inflationary pressures, which sound like they could be coming in the new year because of some of the stimulus measures that we're certainly getting from the White House, Matt. But if we have more inflationary pressures, but we continue, if we get some confirmation in the December numbers that yes, indeed, there is job weakness and maybe it's continuing, that's a tough predicament.
It is. I think it's a direction of travel towards stagflationary type impulses for the economy. It is what most economists and we thought you would get out of very large tariff increases, and so I think it is beginning to work its way through the economy. I think what we've learned, though, however, is this Fed under Chair Powell, and undoubtedly I think the next Fed, if you have weakness in the labor market, they will respond. They responded last year by cutting by 100 basis points. They responded this year by cutting by 75 basis points. Our base case is that the labor market stabilizes enough over the next several months that the Fed does not cut in the first half of the year. But look, if you get confirmation that the unemployment rate is 4.6% or above, I think the Fed cuts in the first quarter.
All right, good stuff. Getting ready for 2026.
Come hang out with us in the first quarter.
I would love to come back.
We would love to have you back. Matt, thank you so much.
Thank you.
Happy holidays. Happy New Year. Matt Luzzetti, he's Chief U.S. Economist, Head of U.S. Economic Research for Deutsche Bank. We're going to talk more about Fed policy, the economic data, and what that means for markets in just a moment. Having said that, we are seeing stocks under pressure today.
Yeah, taking a look at the S&P 500, down about 1 full percentage point right now. If I go deeper into the S&P 500, it's information technology, communication services, and industrials that are all taking a hit. The industrials move, Carol, is really interesting. If you look at the worst performers in the S&P 500, these are all companies that are tied to, in sort of a tertiary way, the AI boom. So you have GE Vernova down 8.8%, Constellation down 8.1%, NRG Energy down 7%, Vistra Corp down 7%. Oracle is the first big name that is sort of like, okay, this is an AI, primary AI company now, or seen as like a bellwether for AI. That's down a whopping 5% today.
And rode a wave up in a big way because of its connection and kind of lean in, if you will, into AI in a big way. But now that, we're watching in terms of what it's doing to the company's balance sheet, investors are maybe saying, well, if this doesn't all come to fruition, what does it mean for a name like Oracle and some others? Let's not forget, we'll get a read on AI once again when Micron Technology reports after the closing bell. That stock up 165% so far here in 2025. And in today's session, we're seeing it down about 4% ahead of those markets.
Well, we just
ahead
talked
of that
to
release.
Deutsche Bank's Matt Luzzetti all about the Federal Reserve and his view on what the next Fed chair has in front of him or her, depending on who it is. I'm guessing our next guest has some thoughts on the Fed and what it means for financial markets. Back with us, Alli McCartney, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. Just over $1 billion in assets under management. She joins us here in the studio. We're going to talk about the markets and today's moves and sort of big picture what you're looking at. But we got to start just with the Fed and how you're thinking about the next Fed chair.
Next year, and the Fed is going to depend all about, it's going to be policy and politics, right? I'm not sure which comes first. Market seems to be about 50-50 on whether we have a cut in January. We think you see 2 cuts next year, one in the first half of the year, one in the second. Okay. I think it will be largely dependent on who's in charge, what the inflation is that we see coming into the market, whether it's from healthcare. We were talking in makeup chairs about the increase in cost of healthcare for average people going up almost 100%, as well as tariffs push through from like later this year. But it is, in a sense, it is anyone's guess. The markets seem to be pricing and playing as if they know there are further cuts. It's just not clear when or how profound. If you look at the last Federal Reserve dot plot, you could sort of drive a truck through whatever neutral is. I think it was 2 to 4% was about a little bit of a range. So I think you basically have tailwinds that are, we know that earnings are going to be, decent to good. We know those are going to broaden out a lot just from the IT trade. So that's, one of the things. Fiscal policy, especially in the first quarter, is going to be major as a result of both income tax sort of rebates as well as corporate spending initiatives and accounting issues that are going to propel both earnings and cash on balance sheets. And then again, the Fed will be part of this for sure.
Alli, when you look at 2026, and I want to think about this year, like how we thought things were going to go initially when President Trump came back to the White House, how it played out, April Liberation Day. Like, I think we were all whipsawed in terms of our expectations, and ultimately kind of how it all laid out. And I think we thought this was going to be a disastrous year. And yet I look at the major equity averages, not so shabby. Certainly, again, if you're a bull in this market. So, I mean, I don't know. Is this a reminder that it's going to be maybe hard again next year to make calls, or is it different?
Well, was it hard to make calls this year? So you had to get two things right. You had to understand two things. You had to understand what AI was going to become in terms of a movement from the chief constraint being chips to the chief constraint where we now sit, and I think what's moving the market today, which is energy and land for data centers. And you had to get Trump right.
So, okay, those are difficult.
Those are very difficult. You also could have simply been long beta on the concept of earnings.
Meaning you just throw money in the S&P 500.
Exactly.
And you're good.
And
tough moments, but you would have done well.
Exactly. Next year, I think it becomes, actually, if I'm thinking back to where I was a year ago, it becomes a little easier in the following. While I can't say that I or we can get Trump right, I think we can get directionality and maybe short-term volatility we can dampen, because we know it largely leads to what he wants he gets, which is mid or longer term markets up. I think
he does care about market direction.
He does care very much about market direction. I think, the craziest thing about getting Trump right or wrong was he told us exactly what he was going to do. He told us via press conferences, via other people, via social media, and so if you went with him, you got things right. I think this year things are going to be a little. So I think they're going to be a little easier in the broadening out of earnings, right? So if you look at, for example, the S&P 500 or the NASDAQ this year, what you got was the AI trade contributed to about 75% or 80% of what ultimately became the upside. So if you look at the next best contributor, it's financials at 1.7%, right? Next year, I think you're going to get some broadening in that. I think industrials, materials, financials, healthcare are going to play into that.
What happens if the promise of AI doesn't come to pass?
That's the biggest risk case. I think the biggest risk case for next year is for investors or economists or policymakers is that we got AI wrong. The infrastructure, it's not if you build it, they will come. It's not that we start to democratize and deepen.
It's a big bet.
It's a big bet. And today, that bet in terms of what's been coming out around Blue Owl and financing, because one of my biggest takeaway from a 4-day AI conference 2 weeks ago that UBS threw is that this is all about debt financing. There is not enough private debt and there is not enough capital on the balance sheets of the non-hyperscalers to get us where we need to be in terms of AI. And so it has to be debt capital markets.
Oracle is Exhibit A.
So to me, I literally left there going, oh, I understand what the constraint is now. I understand the difference between let's say, a CoreWeave and how they talk about how they finance asset-backed, AAA companies and how the market has been responding to that finance. I understand the private debt market and the private equity market saying we can only do so much in terms of what's needed. And so capital markets and public individuals have to come in. And so I do think that's the biggest risk. But I can also tell you from that conference and the conversations I've been having that this is truly revolutionary and moving to the bottom line in a way we've never seen before. And that whether it's creativity in the financial markets, in the structural markets, that the productivity increases and the changes to both costs and revenue generation are we really are at an inflection point that can support different multiples.
And the Oracle story is Oracle's financing for data center in Michigan progressing, but Blue Owl Capital, which has been a longtime partner in Oracle's rapid AI infrastructure build out, opted not to contribute equity. So that's
exactly what we're talking about. Right now, it is a closed, finite ecosystem.
Right.
And in order to get where we need to be going, it has to get much bigger.
Alli McCartney, Managing Director of Wealth Management and Private Wealth Advisor for Alignment Partners over at UBS. Thank you so much. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all trading in the red. Right now, the S&P 500 index is down 63. That is a drop of 0.9%. Volatility lashing Wall Street, pushing high valuation tech stocks and crypto lower. Right now, the Dow is down 171, a decline there of 0.4%. The NASDAQ Composite Index down 342 points, down 1.5%. The Bloomberg Mag 7 Index is slumping by 1.6%, 10-year at 4.15%, the 2-year currently yielding 3.48%. Gold is up 0.8% at $43.38 the ounce. West Texas Intermediate crude advancing 1.4%, $56.05 a barrel, and Bitcoin now down 2.2%, 85,813 on a Bitcoin. Earnings news, we heard from Lennar last night. Its forecast for quarterly home orders missed analyst estimates. Lennar shares, they're down 4.8%. Among peers, D.R. Horton down 2.2%. Pulte Home down 1.5%. Toll Brothers, the luxury home builder, up now by just about 0.5%. First day of trading for Medline, shares are up by 32%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Massar, Tim Stenovec live here at Bloomberg headquarters in New York City. Now, many, including those that are wealthy, are concerned about some of the priorities of incoming New York City Mayor Zohran Mamdani. Now, weighing on this was one billionaire who does not call New York City home. We're talking about Citadel founder Ken Griffin. He talked about the city yesterday at a conference in Paris.
I think that New York City is a red flag because people put aside good sense and common sense to elect somebody who is incredibly charismatic, who ran a really powerful campaign on social media, but who ultimately doesn't have the ability to deliver on the promises that he set forth. New York took a big setback during the de Blasio days, and I hope that Mamdani starts to think about how to pivot to a more thoughtful set of policies that will allow New York City to maintain its position not only as one of the greatest cities in America, but one of the greatest cities in the world.
And that, of course, was Citadel founder Ken Griffin there with Danny Berger of Bloomberg News. We want to get into our guest, Kathy Wylde. She is president and CEO, outgoing president and CEO of the Partnership for New York City, which represents much of the city's corporate leadership. So we're talking about real estate developers, private equity firms, banks, many, many companies. Bloomberg LP, by the way, is a member of the Partnership for New York City. She is also, though, part of New York City Mayor-elect Zohran Mamdani's transition team, and we have a lot of questions to ask her. Also with us is, of course, Bloomberg News senior reporter Myles Miller. All of us here in studio. I told you, as you sat down, that we have about an hour of questions. So we're going to start and cover.
We'll talk fast.
We will talk fast. Why did you want to be a part of the transition team for the mayor-elect of New York City?
Well, I think to the point that Ken Griffin of Citadel just made, and he's one of our members as well, and is a great corporate citizen of New York and Miami. He made the point about the concerns about the high expectations that Mayor-elect Mamdani gave to his voters, and he, to his credit, brought out 170,000 new voters, mostly young people in the primary. The cutoff age for his voter support was 45. So many of us are beyond that point and looking around and saying, oh dear, does he have the seasoning to be able to do this? And I think that he's got the energy and the intelligence, and it's up to all of us who have a little more seasoning to be helpful. And so that's why I joined the transition team and was happy to do that. And I'm working on the economic development workforce activities there. But in general, I think working with him to capture the enthusiasm and the energy. We came out of the pandemic very negative.
Yeah.
And we lost 1 million jobs, and then concerns about the cuts from the federal government on entitlement programs, whether it's Medicaid and health insurance, that is the fight going on now. This casts a real pall over New York City, which is very dependent on those funds. So I think that what he's brought is a positive energy, and we ought to capitalize on that, and hopefully he'll be the best marketer this city has ever had.
Your role on the transition team, does it turn into a full-time job? in the Mamdani administration?
I am definitely not at my age looking for a full-time job. I'm trying to get away from a full-time job.
Right now you have more than a full-time job because you're outgoing president of the partnership.
I am outgoing, and I do not plan to take another job, but I do plan to help the new mayor if he wants it.
So beyond the transition period, you would stay on as an advisor?
Well, I don't know. I don't know in what capacity. As I say, I'm there. I'm certainly going to help Governor Hochul deal with her challenges. I've worked closely with her. She's done a great job, and I think we're counting on her to continue to manage New York's relationship with Washington and the relationship between the state and the city, which is very important. Our affordability problems will not get solved by the city alone. This is going to take federal, state, city cooperation. And so I think all of us who are committed to New York City in the future, we have to be thinking of all three levels of government and how we work with the leadership at all levels.
You brought Mamdani to meet with business leaders on several occasions. I wonder if you can talk about what his demeanor is in these meetings, right? I've talked to Bill de Blasio about, how he works a room, how Mamdani works a room, and really gets the business community to be comfortable around him. But also talk about some of these policy proposals that business leaders wanted answers to. What are the things that business leaders said to him? Well, that sounds like a lofty thing that won't get done, or hey, that sounds like something that is much more than we're willing to back.
Well, there's been quite an evolution since he won the primary. So in terms of his having a more nuanced position on a lot of the policies, during the primary campaign, there were a whole slew of candidates, and everything was one-liners, and the social media stuff was one-liners or show and tell. When you get into a conversation with CEOs, they want to hear data, they want to hear facts. And I have watched him evolve and grow over the last 8 months, where we had conversations last week, one on housing, one on childcare, where he was there with a pen and a notebook, taking notes, asking questions, and coming back with very substantive responses. So he has absorbed a lot and is now digging deep on these issues that, Ken Griffin expressed concern about the fact that he made a lot, raised a lot of expectations, created a lot of idealistic notions about housing and childcare and how we can do all this for free. I think he's very quickly figuring out none of this is free. Raising taxes creates real issues. You may raise the rates of taxes, but that may not result in more revenues if you scare people away, or if you scare companies away, or as we've seen lately, we're seeing a real threat to jobs in New York. We, for the first time in my experience over 50 years, are seeing a decline in the number of jobs in our financial services industry. Scary thing, that's 40% of our state income tax revenues. These are, we've got to pay attention, and I think he gets that. But we've got to be at the table discussing these issues and helping figure out how do employers help solve the child care problem.
Kathy, one of the things I think about, and I remember, being at Milken years ago and talking with very wealthy investors who said, yeah, it's about time we pay more taxes. So what is the balance? And I am curious, among those folks that you talk to who are very wealthy, and a lot of times their wealth is not in income, it's assets and it's investment gains. What do they think, though, should be maybe more of their contribution? And I know they often contribute in philanthropy and so on. I know that. But I'm just curious, what is the balance of willing to pay more? When, again, I've had side conversations with folks who are surprised that they aren't paying more in taxes.
So what I've found, and for somebody who's upper income, earned income in New York, which is our biggest taxpayers, we're paying 55% of our income to the federal, state, and city government, if you all in. So we're paying more than half my paycheck goes to the federal government. So it's not like we're getting away with something. For the very wealthy who are capital gains, et cetera, the big problem there is if they move their legal residence out of New York City, we don't share or get taxes. They aren't taxed here on the basis of their global income, and so we may get a piece of their paycheck, but not their wealth.
Right.
And that's a big question. It is. But what I found is over many years, when business leaders and the big taxpayers are at the table, and they see that, number one, government is doing what they can to figure out how do we offer the most efficient, the most effective services at the lowest cost possible? How do we make government more efficient on the one hand? Then you begin to narrow. So what's the delta in terms of what do we need to raise revenues for? So, for example, when Dick Ravitch in 2007 for Governor Patterson led the effort to figure out how are we going to pay to upgrade our subways, which were falling apart, we supported, and the business community supported, creating a payroll mobility tax, where a portion of payrolls of corporations, employers who were in the metropolitan region would go to that. 82% of the employees who work for our companies based in Manhattan take the public transit to get here. That was something everybody signed off on. We supported an increase in that tax twice. Same thing with congestion pricing. We supported congestion pricing. Obviously, a user fee where you get something, reduced congestion, more time in your day is easier to sell. So it is not, and actually when Mike Bloomberg was elected mayor right after 9/11, the city had to raise real estate taxes in order to rebuild and recover from the 9/11 shock. We supported that 18% tax increase in real estate taxes. So it's not that we're anti all taxes.
Yeah.
Is government doing what they can to keep costs down, to be responsible in what they're spending, and then what is the contribution and how do we make it that makes the most sense, gets the most bang for the buck?
Just very briefly, because you spent such a big part of your career working on affordable housing, I'm wondering if the mayor is sticking to freezing rent as his solution for affordability, because not one person that we have spoken to over the last few months thinks that not increasing supply and rather freezing rent is the right way to approach the affordability crisis with housing.
Well, the new mayor is very well aware that those are not mutually exclusive options, and that if there's no economic return, nobody's going to build housing. He's figured that out. So he has said really since pre-primary that he understood the private sector had an important role in the supply side and he was going to work on that. So I think that, again, his view is much more nuanced. When he says, now when he talks about freezing the rent, he says, and one thing that will enable us to do that is if we do reduce property taxes on rent-stabilized, regulated buildings. So he gets it. He can add and subtract.
So can you come back?
You said we had an hour. We had hour's worth of questions.
Barely scratched the surface, but we so appreciate it. Kathy, thank you. Good luck.
Thanks
Good luck.
for having me.
Kathy Wylde, President and CEO, outgoing President and CEO of the Partnership for New York City, part of the transition team of the New York City Mayor-elect, and of course our Bloomberg News senior reporter, Myles Miller. This is Bloomberg.
2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all in the red. Volatility lashing Wall Street, pushing high valuation tech shares and crypto lower. Here's where we stand. The NASDAQ 100 index right now is down by 413 points. On that index, a decline now of 1.6%. Keeping it all in context, the S&P is down 0.9%, NASDAQ down 1.5%, Dow Industrials down 141, a decline there of 0.3%. The 10-year currently yielding 4.14%, with the 2-year 3.48%. Gold is up 0.9%, $43.38 the ounce, and West Texas Intermediate crude up 1.4%, $56.05 a barrel on WTI. Warner Brothers Discovery, the parent of HBO and CNN, now advising its shareholders to reject that hostile takeover bid by Paramount Skydance in favor of its original agreement with streaming giant Netflix, deeming the Paramount offer inferior and inadequate. Shares of Warner Brothers Discovery today, right now they are trading lower by 2%. Netflix up 0.8%. Paramount Skydance down by 4.3%. First day of trading for Medline. Medline shares right now advancing by 30.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pallett, and that is a Bloomberg Business Flash.
All right, everybody, another IPO getting it in just under the deadline of 2025. I mean, the end of the year. It's the biggest initial public offering of this year. We're talking about Medline. It makes and distributes medical supplies such as gloves, gowns, exam tables. You've all worn them probably at one time or another. It's used by hospitals and doctors. I mean, it's just kind of like plain vanilla in terms of a company.
Yeah, but this one is widely anticipated. The stock just surging in its first day of trading. It was up earlier more than 20%. Carol, now 31% higher.
Yeah. Just out of the gates, here. So we wanted to talk a little bit about it. There you can see the real trade, 32% to the upside. Bloomberg News equities reporter Natalia Kniazhevich is with us. Why were investors just so interested in this IPO? I mean, it was oversubscribed, according to those in the know, many times over.
Exactly. I think like every IPO, most of IPOs are oversubscribed, but this one in particular shows that investors really want to see established businesses with clear profitability. Of course, it is a profitable business. It's been here for a while. The company was founded in 1966. So yes, it was oversubscribed. Demand was really strong across long-only investors as well. And the company marketed shares between $26 and $30, priced at $29. Now it is trading at $37. It is a pretty successful story.
Yeah, and a lot of big name Wall Street firms, private equity investors involved in this one. The backers and firms who were involved, it's pretty much everybody.
Exactly, yes. And this is also a very good signal for 2026 because many people expect more private equity-backed companies going public. Again, of course, it depends on stock market volatility and other factors, but this is a very good signal for the stock market and IPO for 2026.
You know who hopes that those PE firms go public? Private equity firms, right? Because they have been trying to exit for a while. Natalia's staying with us. Let's bring in Mike Bellin. He's the U.S. IPO leader at PwC. He joins us from Denver. Mike, good to have you here. The IPO year overall, give us some numbers, how we're ending up and how it compares to years past, because I think the peaks were back in 2020, 2021, back in the pandemic days.
Yeah, well, thanks for having me. And I would say 2025 was the first true reopening of the IPO window in several years, but it was a selective one. Year to date, we've seen about 75 IPOs, including the one you were just talking about. That sounds good compared to the 62, 35, and 28 IPOs that we've seen in 24, 23, and 22 respectively. But a good IPO year in the U.S. is anywhere between 100 and 150 IPOs. So we're well behind that. But overall, 2025, we've been largely in line with expectations. And in some areas, it's exceeded them. We've seen activity spread across sectors rather than concentrated in just one area. That kind of dispersion is a strong sign and speaks to improving investor confidence. I would say the performance has been differentiated. Higher quality companies like the one you're just talking about with strong fundamentals, solid revenue growth, path to profitable or a path to profitability, reasonable leverage, and a compelling long-term story have generally performed well in this market. On the flip side, IPOs with higher debt loads, more aggressive pricing, they've struggled in this market, especially in a volatile macro environment. So that outcome has not been surprising, but it reinforced how selective investors are right now.
Okay, Mike. Everyone just wants to talk about, with regard to 2026, SpaceX, and what that IPO could look like if the company decides to go public next year. Does that make or break 2026?
Well, look, I think when you look at the IPO pipeline for 2026, we see over 200 potential issuers in line that could go public in 2026. The SEC shutdown that took place in October, November pushed a lot of companies that may have had the opportunity to issue in 25 into 26. So number one, I think there's a deep pipeline of quality companies that are looking to go in addition to some of the big names out there.
For example?
I think we read them all in the headlines. Some of the hyperscalers that are out there supporting the strong markets. In addition to those, there's a lot of PE-backed companies that, the one today, they got a lot of attention. They priced well. They're trading well, as you noted. And I think the backlog of PE-backed companies, sponsor-backed companies in the market is as stronger than ever. They have been a quieter part of the IPO cohort for the last couple of years. So I think 2026 is ripe for strong sponsor-backed companies that have been creating value in the background through M&A, through scaling, et cetera. So I think we'll have a very active IPO market in 2026.
Mike, if we look at performance of IPOs in 2025, it was really mixed. And overall, people think that AI names or crypto names have the biggest kind of, the best case for success. For 2026, what kinds of sectors you think would benefit, where you see the biggest potential? If we set aside some fundamentals or leverage, like where do you think investors should focus on?
I think it's going to be pretty wide sector representation in 2026. You mentioned AI. I think that entire ecosystem, despite the last few weeks or month where there's been some pressure against it, there's a deep pipeline of strong companies in that area, from a data center, from a fiber perspective, and then just broader, the energy ecosystem that's required to power the data centers, and we need to catch up in that area. I think that's going to be very active as we look to 2026. Insurance was an active asset in 2025. Dependable cash flows, which investors like in a volatile market. We'll continue to see strong performing cash generating companies like an insurance company go well. And then I think other areas, you mentioned crypto, fintech, with the rise of digital assets and some healthy regulation, the tailwinds in that sector, we expect that to continue to move forward a lot. So again, I think it's going to be a broad sector representation, which to me represents a really strong IPO market.
All right, so strong IPO market maybe to come in 2026. I looked at the IPO index, and I think it was up 5, 6, 7%. I mean, it's definitely underperforming the broader market. I mean, we had dismal debuts of StubHub, Navin, Gemini Space Station, and so they have all contributed to IPOs underperforming as an asset class, certainly compared to something like the S&P 500. You know, it kind of sits with the notion that companies that go public are supposed to have cheaper valuations than their listed peers. Getting pricing, Mike, will be key in 2026.
I'm with you. When you look at the cohort of 2025, about 50% of the IPOs priced at the top end or above the range that was initially set. So some pretty aggressive pricing there. I think many of the companies that have struggled in 2025 are companies with, debt that's, above 4 times EBITDA leverage, which is tough in a dynamic environment when there is uncertainty still in the marketplace. So I do think companies that are going out in 26 have to be conservative on valuations. They have to look at their debt loads going in. And some of those key metrics that I mentioned earlier around revenue growth, customer growth, some of those key metrics that really show a powerful return will be important. When you look at, again, the cohort of 2025, 65% of the companies that went out had positive cash flows. That's a stark difference than when you back up over the last 5 years. So the quality is definitely being raised.
Hey, Mike, 10 seconds. SpaceX going to happen in the first half of the year. Do we even know? Have we heard anything? Do you hear anything? Real quickly.
I see the same things you see in the headlines. I think 26 will continue to be an exciting year, and hopefully we'll see some really big names go.
Mike Bellin, U.S. IPO leader over at PwC. Bloomberg News equities reporter Natalia Kniazhevich, thank you so much. Happy birthday, too.
Thank you.
All right, we're coming back. Stocks on the move.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading on this Wednesday. What date is it? December
It's Wednesday.
17th?
Yeah, the 17th. Why?
God, it's just flying, man. As we remind everybody, it's the last full week of trading here.
I hope you've done your holiday
2025.
shopping.
I've done enough. I'm just saying, I've done enough.
Enough, okay.
Have you done?
Yeah, I think we're good.
Oh, okay.
I think we're good.
Oh.
Thanks to my wife.
Yeah. All right. Quick check on the markets. S&P 500. We're hovering near our lows of the session, everybody. S&P 500 down about 61 points. That's a decline of about 0.9%. Dow off 131 points, just down about 0.25 percentage point. NASDAQ 100. Those tech names really having a tough time getting it going. Overall, that average is down about 1.6%. Tim, 395 points to the downside.
Well, a lot of stocks are making big moves. Let's take a look at some stocks on the move today. I'm Tim Stenovec along with Carol Massar. With us is Bloomberg News equities reporter and deputy team leader for U.S. equities, Carmen Reinicke. Carmen, we got to start with the IPO, the big one today.
Yeah, so Medline, biggest IPO of the year, $6.26 billion, is huge. So the stock is, I'm just going to try to calculate it live. The stock is up about 35% right now from its IPO price. Is trading at about $39 per share. IPO was $29. So we're seeing, just lots of enthusiasm.
Nice math there, by the way. Well done. Nice math.
Oh, well, I'm not going to lie. I have a calculator open.
Oh, you did? Okay.
She is a professor.
I prepared.
She made it sound like she was like...
I prepared, but I did not do it in my head.
Okay.
No.
But listen, a good debut, right? Obviously, the pricing was right. Investors were into it on a day where the markets are down. So that's interesting.
Yeah,
right?
Very, very solid start from Medline. Should we switch to a part of the market that's not doing so hot today?
Yeah, where do you want to go?
It's mostly other stuff.
All right.
Yeah.
Let's look at Oracle. This is ticker ORCL. So shares are down about 5% right now. The most since December 12th, but this is looking like the lowest since June 11th intraday. So there's just been a lot of nervousness around this company, and sort of the latest thing is that it said while final negotiations on a deal for a project in Michigan are on schedule, they don't include Blue Owl Capital, which has been involved in the financing of a lot of other data centers.
It's a longtime partner of Oracle, so it's interesting to see them pull out or pull back.
Yeah, exactly. So shares not looking so great for Oracle. It's had such a long fall, and we're actually watching for it to go negative on the year.
Yeah, it's only up about 7.5%. Go back, a few months.
September 9th, September 10th.
Right?
It's down more than 40%.
Yeah.
It's really rough.
Huge fall.
We're next. NVIDIA?
Yeah, so NVIDIA is having a sell-off today as well, about 3.5%, which isn't the biggest number, but this accounts for almost $150 billion of market value. So what we're seeing is that it's probably reacting to news that OpenAI is in discussions to raise at least $10 billion and from Amazon to use its chips. So this just adds some competition to NVIDIA, and it's just we're seeing some broad-based weakness across the AI trade today in general, and NVIDIA is kind of always the leader there.
What's interesting is we're also seeing the companies that have benefited from the AI trade that are not, AI-focused companies.
Exactly.
Like energy providers, builders of data centers, they're taking a big hit today too.
Yeah, they all are. It's really across the board, even some of the big gainers. So
NVIDIA is down about 17% from late October. I mean, it's still got a decent gain on the year. I mean, it's still up almost 28% to be close to exact, but we've definitely seen a retrenchment in that name. So, I feel like every time we would talk about like competition to NVIDIA, people would be like, yeah, there's plenty to go around. There's going to be lots of demand. But I don't know, as you get more players.
I think there's also just so much nervousness right now. And we also just had, the earnings reports from Broadcom that didn't look good. There's Micron tonight. So people are just really watching this space to see what's going to happen next.
All right, you got one more for us?
All right, yes, I have Lennar, ticker LEN. So this is down nearly 5% right now. The company gave a first quarter forecast for orders, deliveries, and margins that all fell below Wall Street expectations. Signals that there's just strains on the housing market in general, even with a lower interest rate. Some of its fourth quarter line items also fell below expectations, including orders and margins.
Yeah, it's dragging down the entire sector, right? We've seen Lennar lower. We got those results after the close. I'm looking at home builders in the S&P 500 Composite Home Building Index. 18 names, 15 are lower, only 3 are higher. Toll Brothers among them, and just slightly higher. Yeah, so we're seeing it just drag down the entire group. Great stuff. Thank you so much. Really appreciate it. Carmen Reinicke there with Stocks on the Move. Be sure to check out our Stock Movers podcast, 5-minute episodes, biggest winners, losers in the stock market, and you can find it on Apple, Spotify, or anywhere you get your podcasts.
Well, Carmen just mentioned Lennar. That's kind of where we're going to start in just a few minutes when Katie Hubbard joins us. She's president of U.S. Capital Markets over at Walton Global. This is a land banker.
Yeah.
They've got land in the U.S. and Canada and other parts too. And what they do is they sell to the Lennars of the world, so they got a really good idea of demand. We're going to check in with her about what the real estate industry looks like next year.
Well, and I thought it was interesting what Alli McCartney said with us at the top of the hour, or near the top of the hour, about this kind of land grab for data centers and maybe the impact on housing, or whether or not there's a little bit of a battle. So I'm curious to see what she has to say. We're going to get into that. We're also going to remind everybody that Micron reports after the closing bell. We'll be breaking those results.
End of earnings season just before the big banks report in a couple of weeks, when we're going to be back here in 2026.
End one.
Yeah, that's how it goes, Carol
I love
Massar.
earnings season. What's not to love? All right, folks, if you're watching on TV, the close coming your way in just a moment. Tim and I continuing, though, right here on Bloomberg Businessweek Daily.